All right, what's up, everyone? Hey, listen, we're doing day three now. So I'm at the Tony Robbins Finance Conference. Hope you have watched the previous 2 days. Man, this was a packed day. I mean, Tony had introduced the event saying that the first 2 days were going to stretch you from an information and time standpoint. But we were at it at like about 12:15 is when it started, and we went straight until about almost midnight. So it was insane, and there was more information here. And Peter Diamandis was the last speaker who went for almost 2 hours, and holy cow, like my head was spinning, hurting. Like I couldn't think, and I went to bed. But anyway, it was pretty awesome. It was pretty awesome. So here are my highlights. So first off, Ray. Well, the day started by Tony playing a video that was done by Al Jazeera regarding Venezuela, and it was kind of a brief history within 5 minutes of the rise to power of Chavez, Hugo Chavez. And then subsequently Maduro that went in after, who was appointed by Chavez. But it talked about really the nationalization of assets, and how Chavez was considered the man of the people, and he was going to take the resources and distribute them among people, and it was all oil, natural resources, and that was tied to essentially the basic needs, food, healthcare, education, and other social programs for those basic needs. And he modeled Cuba to an extent, but once oil prices started to fluctuate, right, once correction occurred, right, this is really the case for capitalism, right, where you have individuals who figure out solutions to problems, and in this case, a nationalized or essentially planned economy essentially relies on its experience to solve problems, which it didn't have any. So it's hard to really, when oil was at $100 a barrel, money was just flowing in, and the wastefulness could be masked. However, when there's corrections and price volatility, if you're relying on one resource, then the experience of people was not there, and currently just the situation is atrocious in Venezuela. So I'm not gonna get into that, but basically, I think, Tony, the reason why I wanted to start out with that video, right, is really to show this notion of socialism and this notion of capitalism, and he said something which instinctively kind of had me step back, and it was this: we have to reform capitalism. And when he said reform capitalism, I didn't know what it meant. Now I came to a conclusion as to what I thought it meant, but I did question that, and I think that instinctive pullback was interesting to observe because of how strongly I feel about the principles of capitalism. But I'll address that in a second, because it's pretty interesting what his thoughts are, which are shared by the other speakers of the day. So the first speaker was Ray Dalio. Now, Ray Dalio wrote the book Principles. He has a couple other books he's writing right now. I referenced him yesterday with his 30-minute video that's called "How the Economic Machine Works," which I think I put in the description of the video, so you can click on that video link. And it was interesting. He went through and referenced Venezuela to an extent, because how he looks at just the fundamentals of an economy. There's 3 things he measures, which is productivity, the short-term debt cycle, and the long-term debt cycle. And I'm not gonna get into all those details right now. You can watch the video and you'll get a gist of it. But he made the case that when you look at productivity, because things were nationalized, the productivity of people was incredibly hindered. And that's where you have distribution of resources, where when somebody receives a resource without working for it, there's no productivity. And typically, incentive and resourcefulness is where productivity starts. But there's also this natural kind of chemical reaction to being productive that also adds to the vitality of somebody's life. And that wasn't in existence either. So it's an very interesting dynamic when it comes to the productivity of people and how he measures that. Anyway, I'll go through some of his points and then get on to the rest of it. But basically, he was saying that the next election, what's going to be the determining factor around the winner and the loser, and I would say he's referencing the presidency, but also Congress to an extent, which is the notion of how capitalism is dealt with and how socialism is dealt with by the political candidates and how people feel about that. And so right now there's major conflict, as we all know, right? And I think that's just a growing conflict. But he pointed out some statistics which I found interesting. The first one was that 60% of Americans have wages and socioeconomic, their wages and socioeconomic status are pretty much stagnant over the last 30 to 35 years. And because there is this widening of the wealth gap, because of how society is progressing so fast, there's a growing resentment, and politicians, in the political environment are leveraging this resentment, which is obviously dangerous. And so you're creating two sides of it. But here's where I'll talk about how he referenced, the reform of capitalism, and it wasn't necessarily, meeting in the middle ground, right? If you were to look at a balance of socialism and capitalism, that is what I think I instinctively responded to, right? Which is more socialism is going to help, and this is where he made some points that I thought were very intriguing, right? And the first one is something I've talked about for a really long time, which is the idea of microlending. I believe that the 2006 Nobel Prize in Economics, it may have been the Nobel Peace Prize, was won because of the idea of microlending, which was this idea of giving microloans, smaller loans to third world countries, and having an accountability system in which individuals took that money and were able to buy certain things and then take them to market and be responsible for paying back that loan and keeping profits. And it's transformed nations. My next door neighbor is, I should have him on one of these days, but anyway, my next door neighbor, literally next door neighbor, he is an engineer by trade, but his primary business is he supplies the actual accounting system and micro-lending structure for a lot of third world countries. I think Malaysia is one of them. He's done certain parts of India as well, and Africa. But anyway, my point is, Ray Dalio pointed to, here's a way in which we can create a system here in the U.S. which improves accountability, which improves individuals' ability to think and feel fulfilled. Because just the activity of taking money, allocating it toward a resource, using that resource to make money, and keeping profits, the fulfillment that exists there, the feeling of self-worth is powerful. And I found that really interesting that he talked about that. Another thing too is, so Ray is he lives in Connecticut, Westport, Connecticut, and I'm originally from Connecticut, just outside of Hartford. And he's involved in a lot of philanthropic ventures, and one of those is actually in Hartford. And I did a short internship for the school system in Hartford, just for about 4 months. And it's a mess. It's a mess that I saw it. I mean, they had me. How old was I? I was probably 23, 24, 23, I think. And they had me, write this multi-million-dollar bond, right? Which would essentially fund their budget. I mean, they had me write it, and I was like, I don't even know if at that point I wasn't even sure really what a bond was. And they had me write it. Anyway. That was a long time ago, that's a long story. Maybe I'll tell that one another time. But there's he referenced a lot of the issues regarding education in Hartford, where kids couldn't even go to school because of the danger of actually walking or the transportation to get there. And he looked at studies, and there's studies that show that if a child gets beyond 8th and 9th grade and actually gets into high school, the benefits as far as their involvement in society and working and so forth, what that does. And so it's a focus there to figure out, okay, how can we, improve transportation and safety issues so that, kids can at least get to that point, in the 8th and 9th grade and go through that, jump that hurdle in order to, to have those long-term benefits, which they're not aware of, obviously, during that age, neither are their parents. So it's one of those things where, just facilitating that switch. But basically another main thing, and I'll end with this, is he referred to this notion of where money is spent, it's looking at the return on investment. And return on investment comes from metrics, improvement in metrics. And metrics is whether it's literacy rates or graduation rates. It can come from, poverty rates. It can come from income rates. So it's the notion of taking some capitalistic principles, right, which is profit, taking resources, being productive with resources, and being more productive with those resources than what was done previously with them is profit. So the idea, right, is to take resources, whether it's financial resources or time resources, and leverage those icons of industry, and whether it's in the financial sector or other sectors, technology sector, and put those brains together as opposed to political caucuses or committees or whatever, and incorporating the profound knowledge and wisdom that these individuals have, and use those to improve improve humanity at those lower levels. So I thought that was awesome as far as how they looked at the idea of it's not necessarily reforming capitalism. It's just leveraging capitalistic principles and capitalistic mindsets and successful mindsets in the capitalism system to improve social ideas. So it was really fascinating. He talked about China a bunch, Brexit, let's see. I'm not gonna get into this because there's just so much with him. I went in not necessarily. I've seen a few videos with Ray and read some of his book. I'm gonna dive into it more now. And I got one of those just feelings that I wasn't necessarily aligned with him, and I wasn't sure why. I couldn't pinpoint that. But after yesterday and hearing him speak, and kind of experiencing him, I feel much different. And I think he is a really interesting guy and smart, and has some philanthropic things that he's doing that are making a difference. And so definitely follow him. And he has a couple new books coming out. One is called the life. Let's see, where did you put where are those new books? The economic investment principles, and a book on the debt cycle, which are coming up. You can go to principles.com and check out Ray Dalio. All right, next guy. So next guy was one of his comrades, and this guy was like, man, straight up out of New York City. Howard Marks. He runs Oak Tree Capital, and this guy was awesome. He was just entertaining to listen to because he wasn't. He had those kind of that quirky, kind of subtle sense of humor. But for those of you who have been to Tony Robbins conferences, you're jumping up and down and high-fiving and keeping your energy and your state really high. And I don't know if Howard Marks was prepared for that, because I don't know. It was one of those things where people were asking questions and they're jumping up and down, and he was just like, oh, okay. He was somewhat caught off guard. I'm sure he was forewarned at at what the experience would be like. But anyway, it was just really interesting to see his kind of like facial reactions to what was going on. But Howard Marks just wrote a book, and it really talks about those market cycles. And let me find his book here. Mastering the Market Cycle, right? So Mastering the Market Cycle is that new book. And a lot of it had to do just with how short-term interest rates and long-term or short-term interest-driven securities, bonds for the most part, treasuries, and then long-term ones, and how those are used, and how the yield curve works. And but he went into really the cycles being driven by emotion, and even the most sophisticated individuals are susceptible to emotion. And it's the notion of when there's blood in the streets, buy. But in in hindsight, that's easy to say. Actually, when there's blood there, there's an emotional sense that kicks in when it comes to making investments. And it's even the smartest individuals, most experienced individuals, have a lot of trouble putting skin in the game. And so it's interesting him going through those cycles. But it really comes down to emotional EQ, emotional I would say endurance, right? And being able to understand what's going on and kind of remove the emotion from it, and being able to kind of balance the analysis associated with decisions. And he says it's gone on for a long time. He's been in the markets for 50 years. Has seen multiple cycles, and just says right now he looks at the emotional state of people, where at the top, asset prices are high, risk is high, but there's a peak psychology, right? And the psychology is what's really interesting, where it's the fear of missing out. People are just bidding up and paying high prices. And the example I'm going to use is actually one that I failed to talk about a couple days ago in the for the first day, but it plays into this idea to a T. So, and I've seen this a number of times before, but basically Tony had auctioned. It was a live auction of a $100 bill, and so the idea was, the highest bidder would have to pay, and it would go to charity, but the second highest bidder, even though they didn't get the $100 bill, would also have to pay whatever they bid. So it was the highest bidder and the second highest bidder. And so first off, I want you to just ask yourself, how much did it go to? Like, what do you think it went to in this group? And this group, they showed the statistics. The average net worth is like, I think, 10 million bucks, and the average income is like $900,000 a year. So you had some ballers. You have some ballers in this group. And so anyway, I want you to think in your mind what it was. All right, now that you've thought, the highest bid was $100,000. And the second highest bid was $45,000. So it was interesting. It was bid up, that last bid, by over 100%, right? So from 45 to 100. But again, the emotion. Why did the person go to 45? Like, think about the person's emotions when it's about to go to 100. The 100 is stated, and they're like, 100. What if that guy has $1 million? What if so? Anyway, it was fascinating to observe, and both guys paid up. But here's the point, right? The euphoria that exists at the top, where people are bidding up, and capital flows are abundant. That is where you really have peak psychology. And markets today are very much like that. Now he basically said that we're in the 8th inning. It could be longer, could be shorter. He looks at a potential 10 to 30% drop when there is a correction. But anyway, pretty fascinating. All right, a couple more things, then I'm done. I mean, I could seriously, I might even do a whole segment on Peter Diamandis. So actually, I might do that. I'll just talk about one of the last guys before Peter. And this was very interesting. The couple in front of me actually walked out on him. And I don't know why. It had nothing to do with what he said. I think it was just the actual conversation itself. So a guy came in who was, he's a venture capitalist, but he came in, he's from the Middle East and from Saudi Arabia, and talked about the Middle East. And, he was talking about the 3 shaping events in the Middle East when, as far as how ultra-conservatism started, as well as the, religious radicalism began. And, and he had pictures there and made points that, before the late 1970s, when all of this happened, it was a very progressive society. It was modernizing. It was growing. and women, just the youth were participating in just what would be considered Western activities, right? And then it became kind of radicalized. So he went through the history there, which I think is really interesting. But he also talked about just the perception of the Middle East and how it's very powerful, and it's all linked to terrorism or bad people that hate America. And so he started to point to certain things, whether it's the new king in Saudi Arabia. And also just some of the stuff that he's doing. Obviously, there's the issue with that murdered media icon for criticism, but he's overthrown a lot of past leadership, the improvement in women's rights, and the growing employment rate for females. There was a Comic-Con in Saudi Arabia, which I didn't realize. And then also you had, certain reactions to, because it's not just Saudi Arabia, but it's Iran too, Iran. And anyway, it was really interesting. But the people in front of me, for whatever reason, were just stirred up and left. And the wife specifically was just like, I can't, and I'm not sure what it was, but the tension is clear when it comes to issues in the Middle East. I think for whatever reason, and I think there's multiple reasons. But basically, he was making a point as to the businesses that are there, but also the population, the demographics, where the youth population there is the majority of the population, and so a lot of kind of the radical regime associated with what we connect as far as what the Middle East is and what society is like there. Is dying off the next couple of decades, and so I found that very interesting. And you also look at the involvement of the Middle East in the funds with regards to the VC-backed companies, startup companies in the U.S., and it's like the majority. I mean, tens of billions of dollars. Let's see if I have some figures here about how much has come into the U.S. Yeah, over $15 billion. I'm not sure over what time frame, but I know it's recent. In the last, I would say, 5-6 years, which is massive. And anyway, it's really interesting. He also made the point, which is the last thing I'll talk about, which is the Uber IPO, which is a big thing for him. He thinks if there's an Uber IPO, which would be the biggest U.S. unicorn to IPO, that could be an indication that that's it. The market can't kind of sustain anymore, and typically that has led to collapses of the past. All right, I'm gonna stop with that. Peter Diamandis, man, this guy's amazing. I'm gonna do another one on just him tomorrow, so look for that. Man, this guy stretches your mind, and Kim Butler, who's my business partner as well as very close mentor. I'm very close with her and her husband. They're just amazing people. This is the guy that she is inspired by, and looking at what he is saying about the future, it'll blow your mind. It's absolutely incredible. So I'll talk about that tomorrow. But I hope you guys are well. Hope you guys are crushing it wherever you're at. And thanks for watching. And we'll see you on the next video.